All right, so we're down significantly after earnings. We're down 7 to 8% at the time of this recording, and we are in the morning. So whether we recover or not, I wanted to go over some of the reasons why the stock is down so significantly after earnings. So starting with the number that everybody reported on. This number right here is what they reported as EPS. But there's a big problem with this number, right? Everybody came and got this number from the financial summary page. And I didn't realize until I started seeing other people's coverage of the earnings. You think that they actually came in line with expectations, because the street was expecting 0.85, right? And they came at 0.85, so meeting expectations. Well, not so far. The reason why this is probably not the best number to use is because if you look a little bit further, they're actually using this metric right here. And this metric is adjusted net income. This adjusted net income is a fake number. This is non-GAAP, and this should not be under any circumstance used for diluted or undiluted EPS. But everybody was using that number. Any respectable manager will actually bypass this page and actually go into the statement of operations, which is Tesla's equivalent of the income statement in page 23 right here. And they're gonna actually go into the actual number. And the actual number using actual net income in Q1, which actually net income was 2.5 billion as opposed to the one that we showed in the previous page at 2.7. I don't know why it was so inflated. If you're an experienced manager, you're gonna bypass the adjusted numbers, so you're gonna go straight into the income statement. And if you see this number, then you're gonna realize that Tesla actually missed by about 6% in terms of EPS. It's just the headline number was so adjusted that it makes it seem like they actually came in line, but they didn't. They didn't at all. The other thing that everybody will be talking about, and for good reason, is the margins, right? And we actually broke this down yesterday, but I wanted to sort of give you an idea visually of why this number is so important and why this number is causing such a big price drop for Tesla stock. So the street expected 21%, and you can actually come up with this number if you infer the other numbers. You can see that they expected somewhere between 20.5 and 21%, and they actually came in very, very low at a 18.3%. This is very significant, but it's not so much the actual number that came below 20% that surprises everybody. That is the headline, and that is important, but you can see the trend right here is really going into the wrong direction. Look at what was expected and what we had. The trend actually is a lot more consistently down. So the street is worried that Tesla will continue dropping prices and this is gonna just keep decreasing, and the end is not in sight, right? Like we could go into the 15% or we can go into the 14, right? Nobody really knows when this number is gonna stop. We're now at 18%, as you can see, and I talked about this yesterday. We were actually at 30% last year. So yeah, not good, but it's not so much the headline number, right, as it is the trend of where this is going. Moving right along, another big reason why this margin was so disappointing is because, as you can see, the green graph is the Tesla average selling price. You can see the green graph is actually dropping very significantly, and the problem with this per se is the actual cost of selling that car is dropping not as fast as the green graph, right? The green graph is average selling price, and if you're selling for less but the cost of actually producing and selling that car doesn't drop as fast, then this difference right here is the margin, right? And that's why the margin is dropping so significantly, because they're dropping prices on cars significantly faster than they're dropping costs to actually produce that car. The difference between these two trends is why the margins came in so surprisingly low. You know, we're gonna continue to go down in that trend, because as they said for Q2, they don't care about margins that much, and they're gonna continue to drop prices to move inventory. But another big thing that people are gonna talk about is Tesla's cash flow, and Tesla free cash flow came in fairly low at 441 million, but I think that Wall Street got this one wrong, because why would you expect Tesla to come at 2.4 billion plus in free cash flow when Tesla is ramping Berlin, right? And they're ramping Texas, and now they're actually ramping a mega pack factory in China as well. I don't know why the street was expecting such a high amount of free cash flow. It was a little bit of a fairy tale, and that was never gonna happen. So I don't think this is is such a bad number as people are gonna make it out to be. But yeah, this is a little bit of a miss on analyst part, in my honest opinion. Was it all bad? No, not even a chance, right? We got a glimpse of what energy was gonna do. So it's not all bad. And I think that if the stock actually recovers today, it's gonna be because people are gonna pay more attention to this, the $1.52 billion in energy sales, and came in at 11% margins, which is pretty high for Tesla's energy. Tesla's energy was unprofitable until this part right here. So the fact that Tesla energy came in so strong, this is the saving grace for Tesla. This is actually the opposite of what we saw with auto margins. Auto margins going down, but Tesla energy is going so significantly higher. And I think if investors actually focus on this part of the business, the stock could actually recover. But as of now, it's all about auto margins, X credits, and X leases. And that unfortunately came in super low. And the headline number also came in surprisingly low at -6%, but people are going to report that 8.5, right? People are going to report that 0.85, and that is an incorrect number, and any experienced manager will see right through that. That is why Tesla stock is down. It will not have anything to do with the media. Again, it will not have anything to do with the headline numbers. It's actually, if you look behind the headline numbers, that you're gonna see some of these things that are not super well understood. Anyway, thank you very much for watching. If you found some value in that, subscribe, like, all that good stuff, and I'll see you next time.